Oh man, emergency update, Bitcoin is breaking down right now after failing to nullify important bearish patterns. In this video, I'm going to share with you the downside price target I'm expecting from this latest move and where, if any, support now exists. I'm also going to be sharing with you where am I going to be looking to DCA, because I think we could be setting up for a nice DCA entry and I could be loading up quite heavy into the six figures. Now, as you can see here, guys, a 1.4% day to the downside, having failed to create momentum to the upside. Remember, we had this dotted line, 27,700, acting as resistance 3 days ago. On the Monday, we wicked very close and got rejected by that level. 2 down days now pursuing it, resulting in us curling over. Right? We've got this curling over pattern. To make this a little bit more obvious, let's take a look at the line graph. Look at this line graph and you can see exactly what happened. We created a bounce here, tried to get back over, and now we're just curling back over again. So this is no bueno for Bitcoin, and we could be heading for a bigger pullback into that 25,000 region. Now, you guys know we've not been shy about shouting out about this 25k level, and I think it's all but pretty much ready for us to now go down lower as the bears look to consolidate us down. Now, there is one support line which could hold, and that is the 26,200 level. So we will look to that as a support line. That's this orange line here where my cursor is to hold. If it doesn't, we could be looking for a big pullback down here into the 25,000. From 25,000, that is where I'll be looking for my nibbles for my next set of DCA entries. Now, we've got to be very careful. If we look at the pattern here, this was the symmetrical triangle which we broke down from. Now, remember, in order to nullify this kind of a symmetrical triangle pattern, when you move to the downside, you've got to get back up, work your way past the apex, and start working your way to the upside. We've not done that, right? We had a big move to the downside, we wicked very steeply down, then we created some support, fine, had 2 positive days, and we've just curled straight back over again. So this is the perfect trap, and that's why I posted the video saying, guys, this just looks like a trap, and you're seeing that trap now unfolding, liquidating. The longs that entered these positions here are now getting pressured to the downside. So the full price target from this measured move, of course, brings you to 25,100, which is exactly the level we're looking for, right? If you look at the weekly chart here and just take off some of these diagrams and put the weekly EMA ribbon on top, you will see that that brings you into your weekly EMA ribbon. So we're expecting that. But what we're not expecting, which is where the extra pain could occur, where I will ask you guys to exercise some caution, is if we lose this weekly EMA ribbon. Losing this weekly EMA ribbon below that 24,900 level is going to be painful, guys. And remember what I said, that weekly EMA ribbon is getting higher and higher, right? You can see it's still getting higher and higher. So by next week, the bottom of the EMA ribbon is going to be even higher. You can already see that a couple of weeks ago, the bottom of the EMA ribbon was sitting here at 24,000. Now, a few weeks on, the bottom of the EMA ribbon is sitting at 24,900. Then it's going to be 25,000, 25,100. So if we close below this weekly EMA ribbon over the next couple of weeks, that could spell pain, because we do not want to get below our weekly EMA ribbon. However, testing it is okay. And if we test it and we see good strength from the bulls that wants to push us back to the upside, this could end up being a very nice dip buy. And that's the aim of the game. You want to try to time your dip buys, because Bitcoin's sitting here at 31. You don't want to chase those green candles, but buying it into the EMA ribbon, right? Buying it at 26,100 is giving you a 15% discount. Buying it even lower, buying it at 25,000, then gives you a 19-20% discount, right? And that's the difference between a successful investor and one that just chases the green candles. It's very easy to buy at 31. The candles are green, everybody is hyped, Bitcoin can't do any wrong, everybody's talking about 40,000. Buying in the red is difficult. That's when the fear starts to creep back into the market. And you can see here, fear and greed is sitting at 50. That's neutral. In other words, fear could still enter this market. And I think that push down towards 25,000, you'll start to see this notch into the 40s and then the late 30s. And that is where you start to get actual fear, not neutral, actual fear in this market. And that is when I'd like to roll up my sleeves. And that's when I want to get to work. I have no work to do when Bitcoin's at 31. What do I have to do? Right? I don't want to buy into green. I don't want to buy with green candle disease. I don't need the market to give me confirmation. It's much harder to buy in the next couple of weeks when we get this pain. Even now is much harder than it was here on this green candlestick. But if we do get that pullback into 25,000, That's where I want to put my money where my mouth is and DCA some entries. Now, even though I'll be DCAing at 25k, if you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements, because on YouTube everything is about retention, whereas with a course you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days if you click the link in the description, ijaz.uk/TA, to take advantage of the TA course. Let me know what you think about it, and let's get back into this video. I'm making no qualms about the idea that, guys, we could close our weekly EMA ribbon bearish, and if we do, I have to have money on the side to DCA even lower, because losing this weekly EMA ribbon then puts us back into the game of even bigger, deeper falls to the downside. And I want to give you an example of how this pattern could look like. So what I want to show you here, so you guys know we were forming this head and shoulders pattern. Let me just drop this down to the daily chart. We were forming this head and shoulders pattern, right? And this head and shoulders pattern with neckline across here broke to the downside. We then bounced. Remember, to invalidate the head and shoulders pattern, like we've been saying over the last couple of days, you've got to get above the neckline. None of this makes sense. Ijaz.uk/TA, we go through head and shoulders patterns. There's a whole section, whole chapter which you can skip to and just focus on head and shoulders pattern if that's what you want to work on. But no, we've curled over. We've shown weakness and started moving back to the downside again. So again, what's the price target of this head and shoulders pattern? It sits at 24,100. Now, why should that worry us? It should worry us exactly for the reason I just shared. A close at 24,100 would mean a close below our weekly EMA ribbon, which could set us back for a bigger pullback. Now, where could this bigger pullback pull us to? Where could it take us to, right? Well, you want to look at the wider trend. And if you look at this wider trend, this channel which we've been in ever since this period here in the December of 2022, before we had our big move to the upside, this channel would suggest that if we want to work all the way to the bottom of the channel, you could be looking at price targets even as low as 23, 23.5, somewhere along this range if we look for support. Okay, so whilst I'm not calling for that just yet, it's important we know where are those levels where support could be coming in, because right now support sits at 26,200. If we lose that support, 25,000. If we lose that, that means we would have closed below our weekly EMA ribbon. Then we need to look for more support, and that's going to start sitting at 23.5 to 23 range. So these are the levels I'm looking for. But if we do get a bounce from the weekly EMA ribbon at 25, I want to make sure I would have done my DCAing. So I'm not just going to wait saying, oh, maybe we get to 23,000. Maybe we do, maybe we don't. Which is why I'm going to start DCAing at 25, deep into that EMA ribbon. It's a good risk to reward, in my opinion. Okay, now let's also take a look at some of the other patterns we're working with. You guys know we were forming this M pattern. There were so many patterns which we were monitoring. Again, if you want to trade any of these moves, there's so many obvious moves which we pick out daily in our videos. If you missed this one, no problem, look for the next one. Check out the links in the description to Bybit. Those are the platforms I use to trade. You've got Mexi there as well. You've got Binance there offering some amazing affiliate bonuses, which of course support the channel and mean I can bring you these videos as well. We'll do a bunch of giveaways as well on those, so make sure you stay tuned and you sign up using the links in the description. So the M pattern played out, and the target of the M pattern brings you down to 25,700. So this is one of the higher price targets of the different patterns I've been sharing. But again, where's support? Support is at the red line at 25,000. This is very important line which we need to hold as support. If you look at this structure here, when we move down, boom, hard rejection again from the red line, and then we finally broke through it. So what better than to retest 25 and then go on a mega move to the upside, right? That would be ideal here for the longer term price action. Now, of course, you guys know I shared this with you as well. This is the ideal buy for investor. The ideal buy is to buy it on the retest of this red line, which is exactly why I want to be waiting for this 25 level, DCAing in case we get this powerful move to the upside. Now, of course, in that moment, there is a chance we could lose 25 and pull back lower to that 23, to that 23.5 level, which of course I have to take the risk with that. If we do, I'll be prepared to nibble some more. Now, switching over to the dollar index, there's something critical I have to be sharing with you guys, and that is on the daily chart. the fact that the dollar index has not only broken above its daily EMA ribbon, but it's consolidated above it as well. Remember, the dollar index shows when risk is rotating off. Bitcoin is treated as a risk-on asset. Just like the NASDAQ stocks, just like Tesla and Microsoft and Apple and all these other high growth stock companies, Bitcoin is, whether we like it or not. We may invest in it because we think it's a store of value, because we think it's an antidote to traditional finance, but a lot of people invest in it as a risk on asset. So when a risk is rotating off, they tend to perform badly, which is why we're seeing Bitcoin struggle. And this trend is showing us that it could take longer. Right? Risk could be off for a lot longer. We know that the debt ceiling negotiations are going on. We know there's fears around some of the retail sales slowing down and some of the earnings coming in. That's going to play out. And that could mean we could be spending more time above this daily EMA ribbon with the dollar index doing quite well. So if you look over the last 5 days here, dollar index has moved quite significantly. In fact, if we take the measured move, even though the percentages on the dollar index don't move as much, you can see as much as a 2% swing here, getting back above its EMA ribbon. But if we zoom out to the weekly, this is where the battle is going to occur. And we need to pay close attention to this. So what we're seeing now on the daily chart is it's above its daily EMA ribbon. Fine. But on the weekly, we're still below our weekly EMA ribbon on the dollar index. So it's okay if the dollar index wants to have a couple of weeks here moving to the upside. But we have to reject it and send it down. If we don't, Bitcoin simultaneously will do the opposite. It will lose its weekly EMA ribbon. So if the dollar index regains its weekly EMA ribbon, does something like this to the upside, Bitcoin's probably going to do the opposite, lose its EMA ribbon and move to the downside, because this move to the upside would indicate a big move to risk off. People flocking to the dollar means that risk is rotating off. They want the safety of holding dollars and government bonds. Okay? Now, on the other hand, if it's just a call off, and a move into the EMA ribbon, and then risk rotates back on, boom, send it to the downside. That is going to be good for Bitcoin, because then simultaneously, what we could be seeing on Bitcoin is a similar thing, right? Bouncing into the EMA ribbon and then boom, big move to the upside. And that's what we're looking out for. And that is why personally, I will be DCAing at this point. Of course, not financial advice. Do what you guys have got to do. But again, that's what I'm doing, just sharing it with you guys for edutainment purposes. So there you have it, guys. Big moment here for Bitcoin collapsing to the downside, and more pain is likely to come ahead. I'm preparing and camping out shop around that 25,000 mark. Of course, I won't DCA exactly at 25K. If we start getting closer and closer, I'll start nibbling. So if I've got, let's say, pick an easy number, 10 grand to DCA, I would chop it into chunks of 1 grand. And if we get to, like, let's say 25.7, 25.8, I'll start DCAing. And as we get closer to that 25K mark, I'll make those purchases bigger and bigger. Hope you guys enjoyed. Don't forget to smash the likes. Don't forget to subscribe. Go check out this meme coin video here. And I'll see you in the next one.